Hello there, blockheads, and welcome back to the New Blocks. It's episode 10. Today, we're going to be talking about market cycles. We're back again here, Kevin, adding a 0 to the old digit column here, hitting episode number 10. I forget what the exact figure is, but some number of podcasts, like the average is you don't make it to pass like episode 6, episode 7. So congratulations, bud. You're no longer just another statistic in the podcast world. You've done it. You deserve a pat on the back.
Yeah, I really appreciate that. I am super surprised that I made it this far, except not really because I've been itching to talk about crypto for years now, and I have like another 20 or 30 episodes of content planned out. So yeah, I'm glad to have made it to this big milestone. I also think this kind of like caps off our like true non-technical fundamentals. Like there was obviously some technical stuff in there, but from this point, after this episode moving forward, we've got a series of kind of progressively technical building blocks that kind of lead into to the newer, more interesting things that are happening. But yeah, I wanted to take a second and talk about like zoom out, talk about how crypto sits on a world stage, how it has grown over the years. Looking forward to it.
And this is another one that might be good to watch on YouTube. But we've got a couple visuals that we're going to pull up partway through here. Some of them even animated at that, not even just stills. So if you're listening to the podcast version right now, maybe think about popping on YouTube if you have trouble purely what we're talking about later on. But
production values going through the roof.
Yeah,
this podcast.
Yeah, exactly. We're to be
showing
fair,
websites.
we've had one where we had some visual aids, and a couple people did mention to me that the visual aids helped a little bit, that they weren't particularly exciting. But hey, you know, that's PowerPoint. That's PowerPoint's fault. That's not our fault.
Yeah. Yep.
Okay, so what are we diving into today? What's our starting point here with these market cycles?
Yeah, let's start with a little this week in crypto news first. The European Central Bank just said that Bitcoin doesn't have any of the basic properties of money, and it's a speculative asset with no recognizable fundamental value. HSBC Bank, which is the 6th largest bank in the world, has begun to not only ban users for buying crypto, but even buying stock for companies that own crypto on their balance sheet, companies like MicroStrategy, and I'm assuming
or like
even
Coinbase
Tesla.
Coming up. Or like, why? How?
Yeah.
God, that's so ridiculous.
Yeah.
Refusing service to users for buying stock in Tesla. Yeah, that's That's
so.
something.
How has the crypto market reacted to this bearish news?
Yeah, it's been solid, my friend. The Coinbase IPO dropping tomorrow is certainly exciting news, and that's made headlines about cryptocurrency in general. Surely had a little bit of a short-term effect here. We've hit some all-time highs, though. We broke 63,000 with Bitcoin earlier today. We broke 2,300 on Ethereum, and we're still pushing a little bit. I don't know exactly what we're at right now, but it is certainly exciting times. You get to wake up and see how much closer to the moon we've gotten.
Yeah, and we're 10 episodes into this podcast now, and we really haven't talked about price much at all. And there's a good reason for that. In particular, when I started planning out episodes for this, I'm really not super interested in telling people the price of crypto. Like, you can go look at that yourself. You're more than welcome. You don't need me to explain that to you. For me, I think it's also just important for people to understand the technological side of it before they become invested in it. Because when you do it the other way around, it doesn't always turn out very well. This guy, Dave Portnoy, he's the head of Barstool Sports. He recently was all over Twitter buying Bitcoin while it was rising, did really well while the price was going up. The second it crashed, sold all of it and lost a ton of money in the process, was really burned, pretty butthurt about it. And then he took the time to continue learning about it and then started to understand the value prop and realized that he just completely misunderstood it and kind of owned up to it a bit, which was neat. But yeah, I don't like seeing people go through that route. I'd rather, if you're interested in getting into the space, start with a good foundation of understanding what it is that we're doing long term.
Yeah, I think that the blockchain technology itself is fundamentally more interesting and will kind of stand the test of time a bit more than any specific coin. I mean, for the really big ones, Bitcoin, Ethereum, Litecoin, these like really big market cap, long history, fundamental sort of coins, absolutely, they're very sticky. They're going to be around for a while, even if they do get outpaced by other technology down the road. But blockchain is the foundation of all of it, as we talked about in the very first episode. Cryptocurrency is just really the best application of blockchain we have right now. But I mean, that could change in the not too distant future, where we find some other creative way to apply this blockchain concept to something else.
Yeah, exactly. And despite the fact that I spend a ton of time learning about cryptocurrency and essentially money, I don't personally find it. I'm like anyone else. It's kind of awkward to talk about money with friends and family. That being said, I think it's worth understanding the context that surrounds the price, and sort of through the lens of if blockchains are this first introduction to this idea of like a trust machine, Bitcoin is in that sense sort of a good indicator of how humanity has chosen to trust the first ever trust machine, and how we choose to value it. And like that sounds super hand wavy, but I think it's worth it's worth looking at it more so from the view of like, okay, if the value proposition here is like this store of value, or in Ethereum's case, like more complicated mechanism to store trust, like how has that done over time? And like, are we putting more trust into it? Are we putting less trust? So I wanted to spend a little bit of time, giving some points of reference to talk about it. I'm less interested in people dumping all their money in here and going to the moon and buying Lambos. Like that's, I know it's a meme to say that like I'm in it for the tech, but like genuinely, I'm not here to like go get all my friends to go pump up some coin that I have. Like I'm not about it.
You spent too much time in San Francisco. I can just see you walking around. Hey guys, Kevin Weaver, in it for the tech. Yeah, I'm really just here for the tech. I'm not even that invested because I'm in it for the tech. I'm just using it to hit some smart contracts. But speculating.
Right. Speculating on this technology. So let's talk about some of these examples. First one I'll hit on, and then I'll let you show some websites. But in the United States, we've had a couple stimulus checks. Now I think it adds up to the couple that we've had, $3,200. And if at the time of receiving each of those, you had invested it in just Bitcoin as one example, that $3,200 would now be worth $14,179 or something as of yesterday. So, there's like a very short-term perspective of like the growth that has occurred. But let's take a second and zoom out and look at some of these other points of reference.
Yeah, so here we go. Fiat market cap. Of course, fiat, just a fancy word for money. This is Bitcoin included, and we can see the kind of the relative price conversions here. And they've got max supply cutely listed because every other currency is unlimited for the most part. So very, very nicely laid out here. But does put some things into perspective in terms of global currencies by market cap and how they compare to Bitcoin, China, US, the euro, the Japanese yuan, I believe it is, Great British pound. It goes all the way down to 14, and that's where Bitcoin shows up. So not quite to the moon yet, but making solid headway here, Kevin.
Yeah, and it's pretty nuts how quickly that has occurred in kind of the grand scheme. We're talking about currencies that have existed for, in some cases, hundreds, even longer years. And there's Bitcoin. It just popped up a few years back, relatively. It's now the 14th largest compared to other government-issued fiat currencies. But yeah, next, 8th largest asset by market cap. If you compare company assets, we've got, beating Facebook and Tesla, closely trailing silver.
Oh, wow. That's a lot of gold out there. This is an interesting chart because I never quite realized how large the market cap on gold is. It makes sense. Silver as well, 1.38 trillion at number 7, and then that puts Bitcoin in 8th at 1.182 trillion total market cap right now, and that is at a current price of $63,288, up 5% today.
Yep. It's swinging with the big boys and girls. It's in the big leagues.
Yeah.
Next one, best performing asset of the decade is not something to ignore, right? Because a lot of these we're talking about, like stimulus checks have a very short time frame that we're looking at.
Mm-hmm.
But like a decade, 10 years, Bitcoin just demolished everything else comparatively, between like S&P 500, gold. It's been pretty interesting to watch just the amount of return on investment that has the difference that has occurred.
Sort of a lot of data points to digest here, and a point where I wouldn't blame you if you hit pause and zoomed in a little bit to take some thoughts here. We're looking at Case Bitcoin, making the case for Bitcoin every day. What a cool visualization here. But they've got Bitcoin broken down with ROI by year and then relative to gold and the S&P 500. And man, over the last 5 years, the S&P 500 has done pretty well also. It's ramped up from plus 50% per year, like 5 to 10 years ago. And last half decade, we've been pushing 3 figures here, 100%, 150, 200% returns on the S&P 500. Of course, Bitcoin completely dwarfs that when you look at percentage returns. Even just 5 years ago, we were at 15,000% return because Bitcoin did open pretty low, Kevin. We can't forget that. But yeah, we're up to a 5.5 million percent return if you were one of the very, very, very early Bitcoin holders.
Yeah,
so,
and if you scroll down to that chart, underneath some of those metrics, there's the store of value ROI chart. It defaults to 2 years. If you bump that up to the full decade, switch at the top left there, switch that over to 10.
Mm-hmm.
That kind of gives you a better visual of where Bitcoin sits compared to gold, S&P, U.S. bonds. And it's kind of hard to differentiate between those other things and like the 0%
straight lines at the bottom.
At least when you're comparing Bitcoin, right? Like if you remove that from there, it would look a bit different. But pretty bizarre.
And of course, we're talking about just Bitcoin. So we're not, if you were to lump in all of the cryptocurrencies, if we were to start averaging for some of the lost capital and the failed ICOs and all that stuff, we are cherry picking a little bit here, but it's more just illustrating the point of what our foundation level looks like.
Yeah. So next up, I think it's a chart that we've all probably seen at one point or another. If you've ever Googled Bitcoin price, that is the like linear chart of the price of Bitcoin. And it's not actually super great at showing the long term. If you switch that chart over to just the max time frame that it'll allow you to load, you see this long horizontal line, and then you see maybe just a couple big bumps, and then all the way on the far right, it's going vertical. And that doesn't show a great view of like how this has really grown long term.
So yeah, the linear chart is sort of telling, but one of the better tools, I think, is this thing called the rainbow chart. And the first time I saw this, Kevin, I was actually a little bit mind blown, and it was pretty recent. I couldn't believe no one had linked this to me earlier on in my cryptocurrency journey. So help me break down what we're seeing here, the Bitcoin rainbow.
Yeah, and actually, before we even start at this top graph, if you scroll down just a little bit more, you'll see, for reference, these were the original charts from 2014. The difference here is, on a regular linear graph, you are showing the price, and the y-axis is growing in a linear fashion, $1, $2, $3, etc. With a logarithmic graph, it increases exponentially. So you've got 1 cent, 10 cents, a dollar, $10, 100,000, 10,000. Yeah. Starting in 2010, we saw our first spike in Bitcoin. And it went through a series of these boom bust cycles that lasted years. It spiked again later in 2013 and 2014. And then if we scroll back up to the top, we see that the 2013 and 14 spikes, we get all the way through 2018 where it spiked again. And we're in another market cycle. We're in another boom, a bull market. And this is sort of a better view to help you understand that this isn't the first time Bitcoin has done this. And it's likely, not the last, at least to some degree, because technology as it is adopted by the masses, whether it's the internet, whether it's Bitcoin and cryptocurrencies, it tends to grow exponentially. You tell a friend about it and that person learns and adopts it, and they tell two friends about it, and then those two friends tell two friends, and suddenly it's exploding. And it's hard to wrap your head around, and it's hard to show from just that linear growth chart that most people often see.
Yeah, absolutely. I love data visualization tools like that, and it shows the spectrum of relative to the expected growth, how that price variation down all the way from fire sale, like buy immediately, to super overpriced, sell immediately, take the profits where you can find them. Just showing the extreme gap that I guess that exists on this spectrum of speculating unprecedented currencies and technologies all bundled into one. Very cool.
Yeah, and a common question that people then ask is, why is it moving in these market cycles? Why is it going through these boom and bust cycles? Why can't it just, slowly increment and get adopted? And there's a couple of reasons for that. So reason number one that people often mention is that Bitcoin has a monetary issuance policy that cuts itself in half every 4 years. These are called halving events, and we've talked about them in previous episodes, but it sends kind of an immediate supply shock that the market needs to deal with. We go from 50 Bitcoin down to 25 Bitcoin every single new block. And then, I think we're down to like 6.5 or something.
Right.
And every time that happens, there tends to be this like shock that gets priced in. Suddenly the Bitcoin supply just dropped in half and the demand is all still there. That's kind of one side of the coin, though.
Yes, I guess specifically to give like that clear definition of halving again, like you said, it's by design, but it has to do with the block reward. So all the miners that are working on assembling the block that's like in queue, as we've talked about, a reward gets paid out that's shared across those miners. That reward is what gets cut in half. So it greatly reduces by 50% the amount of new coin that are getting put into circulation every time a block gets minted. So that makes perfect sense that the market would cycle around that. I can't believe that I hadn't thought about it like that before. And it's written in. Is it a time thing or is it a number of block thing? Or when you say 4 years, okay, so 4 years is just the approximation.
Exactly. Yeah.
Yeah.
And it's not always an exact science. Sometimes the market tends to price them in advance of the halving. Sometimes it's a little bit after the halving. And also it's like anything else. This is just one potential way that this could be affecting the time frame of these boom bust cycles. But another aspect of it that is more broad than just Bitcoin, but in technological innovation, is the cycle of adoption and infrastructure improvements. You start with a new thing, and that new thing begins to see new adoption. There's increased usage. That increased usage leads to, in the case of Bitcoin, network congestion. So, more and more people are using it, but there's only a limited number of block space every single time there's a new block. So it eventually leads to this place of we need to build more infrastructure to allow for more traffic, to allow for more bandwidth. It just the same way that at the beginning of the internet, when all we had was AOL, the bandwidth was like a tiny little straw, right? The whole internet had to feed through this tiny little this straw of space where all content on the internet existed. And then we slowly built out more and more infrastructure to allow for things like pictures and then videos and then streaming videos and then VR. And eventually, like we slowly build out more and more bandwidth. And it's this continuous pendulum that exists between adoption and infrastructure. That kind of like leads to these cycles of like, oh, we don't really have the bandwidth, like the market's going to crash because no one can use the network now.
It's a cycle of like investment in the infrastructure. So everyone kind of knows there's a demand for it. I mean, with internet, it was the same thing, right? We need all this fiber run across the country, but who's actually going to pay to do it? Is it going to be the government? Will it be private companies? Is it going to be a shared utility? Who's building all of these lanes? And fundamentally, there's more market incentives and a stronger case, the more people are willing to use it, buy it, and pay money for access to it. Right. So when the market gets really congested, that becomes a proof of concept for like, look, there's a huge demand for this. We need to find some ways. And then that pushes things along. And that's the pendulum kind of that you're talking about here.
Yeah. And, similarly, there's not a ton of incentive to build roads until people have cars that they can use to ride on the roads. But if the people don't have roads, there's not a ton of incentive to buy cars. So it's kind of a chicken and egg problem that sorts itself out by slowly going back and forth and going between these cycles of adoption and infrastructure.
I see. Okay. So last cycle. Where are we at?
So just to kind of give an idea of what that actually looked like in our last market cycle, we had 2015, Ethereum was born, and maybe it's worth looking at the Bitcoin rainbow chart again here, just to kind of give an idea of where this mapped up to market cycles. But Ethereum was launched in 2015. The Bitcoin halving in that time frame was in 2016. There was a new flood of initial coin offerings that existed on Ethereum in 2017. And that was really the point where like enough momentum, enough adoption, and enough sort of demand for block space had accrued that the price of all of these coins started to shoot up. And that was like kind of the high level of getting up to the peak of our last bull run in the market cycle. And then we got to a point where, network congestion occurred. Fees started going through the roof. If there's a limited supply of block space and the demand keeps growing, the price for getting your transaction on the next block just goes right through the roof, and gets to the point where in many cases your blockchain becomes unusable. In the case of Ethereum in 2017, just one application, CryptoKitties, was this kind of dumb NFT. I own a couple of CryptoKitties, so I can say that it's dumb. It's this kind of like basic, you can buy a cat, you can breed it with another cat. They look different. They combine their genetics. Kind of interesting for the time, but that was enough to kind of kill Ethereum. Like that just brought the block space to a halt, and just congestion killed it.
Yeah, and even in the case of CryptoKitties, when you're making a game like that, you might have a couple hundred users when you launch it. And theoretically, if it gets mass adopted, it could balloon and be worth a lot of money. But you can't really plan on that happening when you're building it. So the mentality is a bit more, well, that's a good problem to have. We'll solve our scaling issue when we get there, if we get there, because if we get there, that means people are using our thing, and then we'll have money and we can throw money at the problem. It comes back to this chicken and the egg pendulum thing again. And then the game becomes unplayable and unusable because the cost to breed a cat outweighs the cost of the new cat created. And then the game's not fun anymore. It's just stupid. You're just
Exactly. Unsurprisingly, can't really use Ethereum. Very expensive to use Bitcoin. Yeah. Prices crashed. People left. And we had this like long 3.5 year period of just infrastructure improvement. on the Bitcoin side, there's different scaling solutions that they're working on. Lightning Network was one that's been around for a little while, hasn't gained a ton of adoption. On the Ethereum side, there's just been a ton of protocol, new protocols that have existed. Ethereum 2.0 has been in the pipeline for a while. There's these other infrastructure improvements that we're going to talk about in future episodes. And we've had this long period to kind of expand the bandwidth pipeline. And now we're back, right? New cycle has begun. 2020, May 2020, was the most recent Bitcoin halving. Prices didn't really move just yet. And then finally, this concept of DeFi kicks off on Ethereum. It's commonly referred to as DeFi summer in the summer of 2020. And that's where prices just started going through the roof. There's this concept called yield farming where you can earn interest in DeFi now. And it's starting to look and feel a lot more like an actual bank account that you can have in crypto, in DeFi. And so similarly, right off the bat, beginning of the summer, prices start pumping. And we started to see kind of the same network congestion again. We saw high fees, prices dip down a little bit in the summer, but we're still in the middle of this cycle. And this cycle is going to be, in some ways similar to previous cycles. I think at a macro level, I think I expect some sort of a price correction. No idea when that'll happen, but in some ways different too, because we are now at a point where Ethereum has this whole this series of bandwidth improvements that are called layer 2 scaling solutions. And it essentially is like more and more of the traffic that's existing on the Ethereum blockchain is moving up into this additional layer, these layers that exist on top of Ethereum that allow the gas fees to go down. And like even in the last 2 weeks, the cost of gas has gone down relatively dramatically on Ethereum. So like we're sort of battling this demand bandwidth expansion that's occurring. And I love watching it play out. It's fun.
As we're seeing, Ethereum has created this great trust foundation layer. So now these layer 2 solutions can be a little bit more centralized in nature, still very decentralized, but being able to utilize Ethereum and use what a lot of things are called a side chain. It's just way more efficient, and you can use a side chain for a specific purpose, like gaming, right? And if you can move all those crypto kitties onto a side chain, but then that side chain talks to Ethereum so they can be moved back and forth and still exist kind of in both spaces, that's really cool. And that's the kind of scaling stuff we're talking about. So maybe a little teaser for next time.
Love to tease our episodes.
Love to tease. So lightning round though. Let's also before do we want to show our little graphic about congestion? So
totally.
There's a lot going on here, a lot to digest, but this is a really cool visualization. This is txstreet.com. And it's just a great little South Park style visualization tool of what the market congestion looks like in Ethereum compared to Bitcoin. And the blocks are represented by these buses, and the buses are waiting in queue to go down Blockchain Ave. And really, it's the passengers that are trying to get on, and each passenger is representative of some sort of blockchain transaction, whether it's something happening on Ethereum or on the Bitcoin side, just trying to move Bitcoin around. And as you can see, there's quite the queue here on the Bitcoin side. A lot of people waiting because the Bitcoin blocks move pretty infrequently. You can see at the top here, I think it's been 20 minutes or something, as it shows the pending waiting line. And Ethereum, it's designed to move through a little bit more quickly. Not a completely fair comparison here, but a cool visualization. And this is real time of how the network is actually operating. So all these little people, you can click on them and it'll show you the network address. Or on the Bitcoin side, it'll show you how much he's trying to send 0.00462 Bitcoin to somebody. This is an actual live simulation of what's happening on the blockchains. And just very cool to kind of digest, the kind of thing you can pop in the background and get kind of mesmerized by it. It's pretty cool. I love this thing.
Yeah, we talk about transparency for a while in this podcast, and it's kind of neat to be able to actually click around and see what people are doing on these blockchains and see all the data that you can get from it. and over time build tooling that kind of it incorporates that open data. I think that'll change a lot of the way that we understand our economy.
It's a great little tip of the iceberg of kind of this metaverse concept of what representation can look like of these data points, even in just simple art forms. So I don't know, very very cool. But let's dive into lightning round questions here, buddy. Is now a good time to buy? Is it too late? Did I miss the ship? Because I have to admit, what's that old saying? Best time to buy cryptocurrency was yesterday. Second best time is today. I totally get that FOMO feeling, fear of missing out. I've got it a little bit. Should I be scared to be buying at all-time highs right now?
So here's the thing. Everybody falls for the exact same cognitive biases. We've all got the same brain bumping around up here in our heads. The price is too high. I'll just wait till the price drops, and then that's when I'm going to buy. Or like, while the price is crashing, like, I'm not going to buy it now because, like, if I do, it's just the price is going to keep going lower. And just don't try to time the market. There's a term, dollar cost averaging, that's worth looking into. It's essentially just the idea of slowly investing with the market, not trying to, have these like huge lump sum investments that you're doing, but just, every week, every month, whatever it is that works for you, whatever little amount of money that you can put aside that you won't really feel in your day to day, that goes a long way long term. And just, if you're just now starting to realize the value of crypto and just kind of understanding the space and realizing that this is a thing, and you want to move you make some portfolio adjustment. Maybe you want to go from stocks into crypto, or maybe it's just like this is your first foray into investing. Just consider breaking that move into smaller daily or weekly or whatever buys. And just remember that like this is incredibly early days still. It doesn't feel like it, but right now the entire cryptocurrency market accounts for something like 0.16 of like global wealth. If you compare like all of the debt that all of the different nation states have, and like all of the like, it's just
and just adoption. Are we even in double digits of like Americans or America and Europe holding cryptocurrency?
It's abysmal, right?
I doubt it.
You talk to any American about crypto, and it's like 9 times out of 10, they're not interested, and they have very little understanding of sort of like what's going on in the space. So yeah, in my opinion, I think it's pretty early days.
And you've got to remember too that in the probably not too distant future, there will likely be tools built where people can utilize cryptocurrency or interact with it in ways that are very convenient, like through the App Store or through these like really traditional interfaces that are centralized right now. That doesn't mean they can't be a portal into a decentralized platform, and those interfaces are still being built. So like right now, you have to kind of go out of your way to set up MetaMask and buy Ethereum and like get all set up to actually be able to do stuff. Those barriers are breaking down like day by day, and that's what I think will get that kind of acceleration in terms of adoption, where the people that are resistant now, once it becomes convenient, they won't be so resistant, in my opinion.
Yeah, the bridges are being built from both centralized finance and decentralized finance.
Yeah.
Just last month, Visa has begun settling USDC on Ethereum. Like, that's big news. Visa, the credit card company, is now essentially like a layer 2 to Ethereum.
Yeah, that's cool.
Like, that's just
pretty
happened.
hype.
So, keep a long-term perspective when you think about long-term technological change.
Yeah.
Yeah. So next questions. Do these market cycles repeat in some sort of like predictable way, or are there additional patterns that we can kind of look out for within a market cycle?
So yes and no. I think it's important to remember that you need to avoid the gambler's fallacy, right? Past performance is not necessarily indicative of future performance. Sure, it's all relative, and that past data is interesting, and it certainly can give you some inclinations, but it's not foolproof, and it is impossible to predict the future. So in that regard, kind of no, but I think these micro cycles lead into macro cycles, like the ones that we talked about, where you see adaptations, even in Ethereum, allows people to get more interested in either Ethereum or by virtue cryptocurrency, and then that leads to more adoption of the other coins that exist in parallel with it. So breakthroughs in technology, sort of in any kind of blockchain or cryptocurrency sense, will push the whole space. Like, they always move a little bit together. It's really rare that the whole market goes up and then Ethereum just goes down, sort of like the S&P 500. They all kind of move in this wave a little bit. So I think there is certainly some truth to that, the rainbow chart that we looked at, but just remember how wide the gap was in the rainbow chart. There's still a lot of variance that can take place, even if you feel like you're somewhat reading the market to some degree. It is still very highly volatile.
Yeah. Yep. Absolutely.
So, all right. If prices crash again, do I sell my crypto? Do I put it back in the bank? How do I manage the volatility that we just spoke about?
Yeah, I mean, I think in general, one thing to realize about investing is that it is important to take profits if you are dumping all of your money in one asset and that asset crashes, like majority of your wealth is going to crash. So the idea here is, like, if you are going to dollar cost average in, that you can also dollar cost average some out. Like, if you get to the point where you're not really comfortable with the amount, the percentage of your portfolio that is wrapped up in crypto, remember that it's okay to, like, slowly do the same thing in reverse. But I think it's important to remember that the whole point of crypto and this move that we're making isn't to make a bunch of money every couple years and then just, like, kind of go back to US dollar and back to the traditional financial system. Like, now with this market cycle, there are new tools that exist that allow you to borrow stable coins, dollar pegged crypto, for off of the Ether and the Bitcoin and the other cryptocurrencies that you own. So you can essentially borrow US dollar from your own investments, and then you can plug a debit card into those stable coins and start to use it in the real world. So I think this is all relatively new, all within this last market cycle. But the tooling now exists where you don't have to go back to the legacy financial system every couple years. Like, if the new financial system didn't also support all of the currencies that existed in the previous one, it wouldn't be a really great one. So there are stable coins, there are US dollar equivalents that exist in
these are the bridges, right, that we were just talking about. These are the connections that allow you to interface with legacy finance through a DeFi interface. You can back yourself with Ethereum through stable coins that are usable in the real world, just like USD, through debit cards and stuff. That's pretty cool. That's and we're still at the very early phase of that, right? So give that another couple years and things start getting really interesting.
Yeah, and it's like, it's wild, just the concept of borrowing that money, and you can think of it kind of as a loan, and then the interest rates in crypto that exist. Remember, this is just like any other bank account. You have interest rates, and so far they're much higher when you remove the centralized third party that's taking the majority of it. You can use those interest rates to pay off your own loan that you're taking out against yourself. Like, this is some deep shit, but not something we have time to talk about in this episode.
Yeah.
Final question here. We've talked a lot about market cycles. We've talked about price. We've talked about market cap. What other metrics are important aside from those that are worth looking at when you're trying to get a feel for how adoption has occurred over time?
Yeah, this is a big one, especially when you're trying to analyze all of what I would call the Bitcoin knockoffs of the world. We talked about some in the past episodes that have forked off, the SV, the BCH, that kind of stuff. Mining and hashing power, staking power, if you're talking about something proof of stake oriented. What's the backbone of the network look like? How risky is it or what's the risk analysis in terms of ERC-51 attacks. We talked about Ethereum Classic, I think in the last episode or episode before. That's a function of this hashing power or staking power that exists on the network. So that's a big one. Number of active users. How many unique wallets exist? How many transactions are actually occurring on the network? And yeah, sometimes these can be faked a little bit by people trying to pump up their own smaller networks, but it is still a key metric to look at. It doesn't really matter what the price of a coin is if nobody's using the network for anything functional, or it doesn't have a value proposition, because that number probably is inflated somehow, bubbled in some way, pumped up, and we know what happens after an artificial pump. In comes the dump. So all these things help paint the full picture of the health of any given cryptocurrency beyond just the market cap or what the price of a coin is. Also, transaction fees that can kind of correlate to demand. In the case of Ethereum, gas prices going up generally means that there's high demand to use the network to interface with NFTs or apps or whatever, or DApps, I guess I should say, that exist in the marketplace. So that's a good thing in some ways because it shows that there's a lot of usage. It's bad in the short term, but that's better than nobody wanting to use the network at all, I think, given all the options. And lastly, like roadmap and future plans. Think about Ethereum. Again, it's backed by the Ethereum Foundation. Vitalik Buterin is sort of the face of Ethereum in a lot of ways. He certainly has a lot to say and is a relatively public figure in that regard, very active on Twitter and other social media platforms. That can make a big difference. Having a roadmap and a plan and a strategy saying, hey, we're killing the environment right now, but we've got a plan to save the environment and still keep our cryptocurrency healthy. That matters, right? That gives me some extra confidence in terms of adoption and the roadmap. So all different things to keep in mind when you're trying to evaluate the marketplace.
Yeah, and all of this, and between this and in our altcoins episode, we're talking about it from the perspective of different blockchains, different like top base currencies, Bitcoin, Ethereum, but all of these fundamentally apply to projects that exist on top of the blockchain. So within DeFi on Ethereum, there's different lending and borrowing protocols, there's exchanges, and all of these concepts apply at kind of those micro project levels, in addition to just the blockchains.
Yeah. Absolutely. So, whoopsie. There we go. Kevin's back. So there you go. That wraps up today's episode. Hopefully you enjoyed our market cycles, kind of overview of the past. I know I did, Kevin. It's great to get some perspective on this stuff and also get some relief that I haven't missed it yet. I can still hop aboard this boat and maybe still find some returns along the way. Really excited to dive into the future stuff, though. This decentralized finance, the DeFi we keep talking about. Man, this shit sounds awesome. I can't wait to learn more about it.
We're getting there. We're getting there.
All right.
Good chatting with y'all.
Yep. We'll see you next time. Bye-bye.